How to donate to a church or charity. Want your donations to your church or favorite charity to actually count as tax deductions? Hi, I'm Dave Horwedel, CEO of Torchlight Tax. If you want the IRS to treat your donations like real charitable contributions, you have to do two things: donate the right way and prove it the right way. Step 1. Confirm the organization qualifies before you donate. Most churches qualify automatically, but for other groups, verify they're eligible to receive tax-deductible donations. The IRS has a lookup tool called Tax-Exempt Organization Search, where you can check an organization's status. This is especially important for smaller or unfamiliar charities. Step 2. Know when donations reduce your taxes. Charitable donations generally help you on your federal return only when you can claim them as itemized deductions. If you take the standard deduction, your donations can still be generous and meaningful, but they may not create a federal tax benefit. This is one of the biggest reasons people think they wrote it off, but don't see a difference. Step 3. Make the donations using a trackable method. If you give cash, check, card, or online, keep a bank record or receipt. If you put cash in a collection plate, the IRS still expects proof. So a written receipt, a church envelope system, or a consistent documented giving method matters. Step 4. The $250 rule can make or break your donations deduction. For any single contribution of $250 or more, you must have a written acknowledgment from the church or charity. That acknowledgement needs to include the organization's name, the amount of cash donated, or a description of non-cash property. And one of these statements, no goods or services were provided, or a description and good faith estimate of what you received, or if it was a church and the only benefit was spiritual, a statement that the benefit was intangible religious benefits. If you don't have that letter, the IRS can deny the deductions, even if you truly gave the money. Step 5. If you got something back, you can't deduct the full donation amount. If you donate and receive something in return, like a fundraising dinner, tickets, a gift basket, or merchandise, your deductible amount is generally only what you gave minus the fair market value of what you received. Step 6. Non-cash donations have extra rules. Donating clothing, furniture, equipment, or other property can be deductible, but the paperwork ramps up fast. If your total non-cash donations for the year exceed $500, you need to file Form 8283 with your return. If you donate a single item or group of similar items worth more than $5,000, the IRS generally requires additional reporting on Form 8283 and often a qualified appraisal, with some exceptions. Translation: if you're donating anything valuable, don't guess the value and hope. It's an audit magnet. Step 7. Advanced move for retirees. Donate from an IRA the right way. If you're 70 and a half or older, you may be able to make a qualified charitable distribution directly from your IRA to a qualified charity. Done correctly, it can keep that distribution out of taxable income, and it can help even if you don't itemize. But it must be paid directly from the IRA trustee to the charity. If the money touches your hands first, you can lose the benefit. Step 8. Bunching donations. If you're usually taking the standard deduction, you may not see a tax benefit from donations in most years. One strategy some taxpayers use is bunching, which means combining multiple years of giving into one tax year. Example: instead of donating $5,000 each year, you donate $10,000 or more in one year, then less, or none, the next year. The goal is to push your total itemized deductions high enough in the bunching year so your donations actually create a tax benefit. This is a planning move, done best when you know your other deductions, like mortgage interest, state taxes, and major medical expenses, so you're not guessing. Step 9. Major tip: donating appreciated assets instead of cash. If you own appreciated assets, meaning things you could sell for more than you paid for them, donating those assets can be more tax efficient than donating cash. Here's why. When you sell appreciated assets like stock, real estate, crypto, you may owe capital gains tax on the profits. But if you donate the appreciated assets directly to qualified charities instead of selling them first, you may be able to 1. Avoid paying capital gains tax on the appreciation, and 2. Claim charitable deductions based on the asset's fair market values. Important details that matter. The assets generally need to be donated directly, not sold by you and then donated as cash, to preserve the capital gains advantage. This strategy is commonly used with publicly traded stock because the values are easy to document and the transfers are straightforward. The deduction rules can differ based on the types of assets and how long you've owned them, and there can be percentage limits based on your income. If you're donating something more complex, like privately held business interests, real estate, or collectibles, the documentation and valuation rules can get stricter, and you should coordinate the transfers carefully before you donate. That being said, donating an appreciated asset can be tricky, but can be a huge tax break. To do this, I recommend you hire an expert, EA or CPA, experienced in charitable donations to do this job. We at Torchlight Tax are experienced and offer a free consultation. Summary: make the donations to qualified organizations, keep the right documentation, and follow the substantiation rules. Because the IRS doesn't award generosity, they award proof. Contact Torchlight Tax for a free consultation at 877-758-7797. If you found this video helpful, please like it, share it, and subscribe to our YouTube channel. You are welcome to visit the Torchlight Tax website or YouTube channel for further tax tips, tax saving strategies, and asset protection strategies. We have over 400 blog articles and videos you can view. The more you know, the more you are likely to save. We are glad to help you with a free consultation. Thanks for watching.